Good day, traders. This is the daily market update live from the Tradelo Trading Floor. It's Wednesday, the 3rd of July, and some highlights from today's show. The US 210 curve has steepened aggressively over the last couple of days. Gold bulls are vulnerable in the near term, and the French election risks are fading. Let's kick off and talk about some of the overnight news. Yesterday, Chairman Powell was live from Sintra, Portugal. Whilst he didn't say anything unique or anything new, a few key highlight takeaways from him. He did very much outline that the disinflation trend is starting to show signs of resuming and that they had made quite a bit of progress on inflation. But he did caveat that and say, well, they need to see more data like they've been seeing recently to give them the desirable confidence to get the cutting cycle underway. He did also add, and he has mentioned this in the past, that labor market, if it does happen to unexpectedly weaken, that would also cause them to react. Very much just bringing in that dual side of the mandate and stressing that, yes, inflation is one of the parts of the mandate, but so is the labor market. So very crucial. That does obviously highlight non-farm payrolls on Friday. Whilst it has been very, very strong for a good part of the last 2.5 years, the reality is at some point we are going to see that smelly print, and we do need to be switched on and respond accordingly. Moving over to Europe then. In early Europe today, we've had some of the PMI data not looking good. Very much a drop in the composite index, a drop down to 50.9. Now, why this matters is because the ECB has been reluctant to get the cutting cycle aggressively underway. They're very much adopting a cut now, skip, get a bit more data, and then wait perhaps and cut at every other meeting. But the reality is, if Europe is starting to slow quite significantly, as the data suggests, the ECB may well be called into action again in September and December, but perhaps even a third time this year. So keep a close eye on that European data. Those early green shoots that the ECB is referring to perhaps are not looking so green. And then sticking with Europe, in France, obviously we do have the second round of the elections coming up this weekend, and the horse trading is going on quite aggressively. We did see yesterday that the so-called Republican Front has come out full voice against a Le Pen majority, very much stressing the importance of not enabling the Le Pen right side party to get that absolute majority. But like I said, French elections, there's quite a degree of complexity in that the parties do pull their candidates ahead of the second vote to almost guarantee that someone doesn't get that majority. So it's still very much a fluid situation. But right now, the market is signaling a sense of positivity. It likes this idea of no Le Pen majority. What does a Le Pen majority mean? Well, it means that the spending bill in France is likely to go up. Obviously, Le Pen is a bit more of a spender, and that's why we have seen a widening of the spread between Germany and France heading into the first round election that we had this past weekend. Now, very, very important. We'll talk about this in one of our themes. The spread has narrowed, and that's quite important because it does reflect the market's interpretation of this weekend's results being not so problematic. Now, turning our attention to some of the overnight market moves. Well, it's a bit of a yo-yo in Europe. We saw yesterday quite a significant down move, and we've bounced back today. Very much Kakaron up 1%, FTSE MIB up 1%. Very much taking the lead from a very strong close in the US markets last night. So we're coming into the US session with quite a positive vibe, and with NASDAQ and S&P and a lot of the Mag 7 all at record highs. It very much looks like another day of just continued higher highs for US equities. Now let's turn our attention to topic number one, and it's all about the US 210s curve. And it matters a lot simply because if you take a look at the chart, what you'll notice is that since we had the debate between President Biden and Trump, the spread has actually moved a good 12.5, 13 basis points. Now, that in its own doesn't mean anything, but what it does show us is that as the markets priced in a higher probability of a Trump win, the result was we did see a little bit of a steepener taking place. And what this ultimately reflects or reveals to us is that the market thinks Trump is going to be not necessarily problematic, but definitely going to be more stimulatory for markets. In other words, he's likely to cut back on regulation. He's likely to, open up the taps and spend quite a lot more. He's likely to cut taxes. So all very stimulatory for markets. And as a result, we did see the back end move quite aggressively on that. Now, does this continue? No, perhaps not. Again, we're 4 months away from election. The Democrats are scrambling to perhaps replace their current candidate. So a lot can happen between now and then. What we do want to do is pay very close attention to that 210s curve. Keep a very close eye on it. Why? Well, if you go look back at September 2022, you'll remember that's when we had the mini budget crisis in the United Kingdom. Liz Truss came out and said, look, we're going to spend a lot to get things going again. The market responded by steepening the curve a good 60 basis points in 1 month. Okay, so if you were to see another 10, 20, 30 basis points of steepening, sure, that will start to spill over. That will have implications, and you don't have to guess what those implications are. You'll see a very significant move in the back end of the curve for higher yields. The result is a weaker currency, and obviously equities will come under pressure in that sort of context. Okay, let's turn our attention then to topic number 2, and that's all about the gold bulls are vulnerable in the near term. Why? Well, gold has been an inflation hedge all of this year. If you go and take a look at the chart, what you'll notice is that the rally to record highs began in February. Now, if you cast your minds back, that's when we had the second hot inflation print in a row out of the United States. Again, in March, we had a hot inflation print, and that gold rally simply continued. So gold has very much been bid up this year. You know, we're up a good 13-14% on a higher inflation regime. Don't forget as well that throughout Jan, February, March, when Powell was prompted about the hotter inflation, he simply pushed back and said, we think it's going to disappear. It's simply just speed bumps, and we focus and maintain the view that we will cut rates. Okay, so that's why the market very much put on these inflation hedges. Now, that thesis, to a large degree, has been eaten away at. Why? Because the Fed is now telling us they perhaps only think 1 cut this year. Back in Jan, Feb, March, it was 3 cuts. Moreover, we've now seen Powell come out just yesterday and stress the fact that the inflation trend is, or the disinflation trend is now back intact. Okay, so gold is very vulnerable in the near term, particularly also because we see a very strong dollar bid. Other central banks are cutting whilst the Fed is maintaining a higher rate. So dollar is not going to back down anytime soon. And of course, we do have yields slightly higher. So gold looks vulnerable to the downside, and it'll snap below the 2300, should open up the door perhaps to a retest of the 2200 area. But again, there are a lot of long-term positions involved, so you don't necessarily want to be standing out of the way and buying it at 2200, but do keep a very close eye on gold as it does look vulnerable, particularly from a fundamental standpoint in the near term. Then turning our attention across to the French elections. As mentioned, of course, there is a risk that the Le Pen party does get a majority this weekend, and that risk cannot be eliminated. Of course, it's still very possible she gets that majority, and if she does get that majority, well, you know what the play is. You should see the uncertainty spread pretty much in the spread between German and Oates. So what you would see is that spread move beyond the 80 basis points, perhaps up to 1% or beyond, and it all depends on ultimately the devil in the detail. What does Le Pen do if she was to win a majority? What does her policy stack look like? And that's ultimately going to determine how wide that spread goes. However, if you're not a bond trader, which I suspect most retail traders aren't, and you don't trade spreads, well, the easiest play is then to look towards the euro. Why? Well, if Le Pen does get into power again, and that spread does start to move between Europe's 2 biggest economies, the euro is going to see some downside. We are going to very much test and break below that 106, and perhaps go and look all the way back down to that 105 support made back in October last year. So keep a very close eye on that. It's a very straightforward play. Should Le Pen win a majority this weekend, you don't want to be standing in the way of that euro. We should be moving a good 200 to 300 pips in relatively short order. Now, that is then obviously our 3 topics for today. My trade of the day, well, look, I think very much I'm going to be looking at the US equities. I think you do want to be trying to hop on for a quick early rally to the upside. But again, factor in tomorrow's July the 4th, which means that there's no markets. We do have an early shut in the future space today. So you don't really want to be overcommitting the day before a very important holiday in the United States. With that in mind, enjoy the July 4th, traders. Good luck out there today. Manage your risk. Go make some money.